What I'd like to do is just start with our panel introducing themselves. And Angelina, we'll start with the women first. Angelina, we'll start with you and tell us a little bit about yourself, your company, and how you see maybe a minute on how you see the market, let's say.
My name is Angelina Nekic. I'm CEO of Delta Real Estate. Delta Real Estate is a part of Delta Holding. We started as support for other businesses of Delta Holding, like retail. We had a retail chain and we sold it in 2011, then a support to our bank business, insurance, and somehow we end up developing all sorts of real estate projects throughout ex-Yugoslavia. We were actually known for introducing shopping malls as a retail concept in Serbia. We built the first one in Belgrade in 2007, a little bit late, and in 2008 in Podgorica, and we also sold that to Hyperop in 2016. So you see the pattern. We developed, we build, then we sell. So that's pretty much explains our strategy and our business. Right now we have a diversified portfolio of shopping malls, mainly in secondary cities, a little bit of logistics as a support again for Delta Holding distribution business. And of course, a little bit of office. And recently we bought from the city of Belgrade the biggest convention center, famous for the name of Sava Center. It's 100,000 square meters of mixed-use convention centers, or a little bit of retail, convention center, and a very attractive office. In the future, we will develop some of the plots that we've been sitting for some time. It's going to be a mixed-use project for several reasons, mainly to diversify the risk, to be as flexible as possible, and that's pretty much wrap in a few minutes of introduction.
Perfect, thank you. Well, Sava Center is a pretty big project. There's not many companies can actually handle that whole thing.
Yes, it's a part of our block where we have like, how many, like, I don't know, maybe 150,000 square meters of ownership. It's a very interesting project. I guess it's is as important for Delta Holding as much for the Belgrade and then for Serbia. It's a beautiful building with cultural heritage, and we are very proud that we managed to acquire it.
Yeah, definitely.
And of course, we have CBRE as our exclusive leasing partner.
Okay. And you're happy with them so far?
Very much.
Okay, all right.
That's why we're sitting next to each other.
Okay, good. Yeah. No one asked to move yet, so that's good. Okay. Zinaida, please introduce yourself and tell us a little bit about your company.
So hello everyone, I'm Zinaida. I've been in the real estate market for 20 years. My background is office leasing, asset management, and lately more in transaction sides. I worked for companies of the likes of GTC, AXA Real Estate in Paris, EuropaProperty, and HB Revis as the last one. But for the past 4 years, I'm equity partner, head of real estate of a privately owned boutique investment advisory based in Budapest. I'm based in Budapest, but have worked regionally and internationally, and mainly our focus is bridging international capital with local off-market or on-market privately owned real estate or development land. Currently, it's more focused on development land that we have as assignments, but also do fundraising we did fundraising for a listed residential developer. And as to how we see the market, or how I see the market, not very, very optimistically, but more realistically, possibly. In a nutshell, we see a widening of the gap of the pricing, especially. There are deals that are being negotiated with buyers and sellers, but we see more and more pressure on the pricing, and definitely the caution that more and more participants mentioned. And we anticipate 2023 to be a slower year, to put it mildly. And speaking to international investors in London and Paris, which we did a few weeks ago, that sentiment is definitely there. And as we have discussed here, what's going on currently, as Europe is exposed to this, I see, and it seems obvious that Hungary is even more exposed to it for various and numerous reasons. And so I think we have a tough year ahead of us, but it's also will be a time of opportunities afterwards, and we see investors and capital, waiting for those opportunities to come. But it's going to be a rough ride.
Okay, thank you. Csaba, let's go to you. Tell us a little bit about yourself and your company, and maybe a minute about how you see the market.
Hello everyone, Csaba Zeley from ConvergenCE. I'm the managing director. I'm having an anniversary. I started 25 years ago in real estate. I worked for quite some agencies. On the agency side, CBRE, Delys, Colliers I started with. I worked for a while for Mr. Kalausz Walter at Equis. I joined ConvergenCE in 2008. We are a boutique investor and asset manager. We altogether manage, co-own or own approximately 60,000 square meters of offices in Budapest, some industrial, which we bought a couple of weeks ago. Our main clients are EuropaProperty.com from London and Kegel from Munich. And happy to be here.
Okay, great.
And happy to be an existing landlord, because existing landlords can benefit the most in the current market.
Okay, great. Boško, let's go to you.
Yeah, side to side, Greg. Hi, my name is Boško Tomašević. I'm the managing director of CBRE for Southeastern Europe. Prior to joining CBRE, I was 6 years with Colliers, between 2006 and 2012, and then 6 years with Jones Lang until 2018, when CBRE decided to open direct offices in the region of Southeast Europe. So we have started in 2018 with Serbia. In 2019 we opened Bulgaria. In 2021 we had a year after COVID, we opened Zagreb, Croatia, and then in 2022 we opened Ljubljana, Slovenia. It's close to 90 people business now, and basically we cover all the service lines of CBRE Global Business. And just the comments on the market, I definitely this year is definitely very good. Next year definitely looks a little bit scary. However, I also believe that at the end we will prevail, and I think that it will be a tough beginning of the year, but I think from, let's say, mid next year it should start coming back. Thank you, Greg, for...
So now when you say tough, is this more on the investment side or leasing or?
I think on investments it's already tough, but on leasing it's actually never been better. I think all over the Southeast Europe, I think the vacancy is no more than 5% in any of the cities. So it's actually, everything that's being built is being leased. I mean, for example, we have a GTC guys here. I mean, they're happy with their performance in the region. I think that they are Ariel, I think 80+% leased. So on the new project, and all other existings are basically 100% leased. So in general, I think only investment is suffering at the moment, and I think it will continue to suffer. Industrial, office, it's rocking. I mean, industrial is amazingly popular. So I think again, only investment and for a certain time period.
Yeah, I mean, even we were in Belgrade over the summer looking for office space ourselves, and we couldn't actually find any that, people would say, oh, we'll come back in a couple months, maybe someone will leave, or maybe something will be available. So it seems like in certain areas like Belgrade, it's, seems like no problem. It seems like that's fully
it's actually,
leased.
What's interesting is this unfortunate war in Ukraine is causing a lot of opportunities because we have on a weekly basis between 5 and 10 large US multinational companies with 200+ people moving to Belgrade, moving to the region, opening offices, and they're paying, above market rents just to enter. Because when you compare, I don't know, Belgrade office, Class A office rent versus Moscow, it's like peanuts. And for them, basically, it's, you know.
So you're doing an invitation to everyone.
That's right.
Yeah, I'm just, you know, basically, you know, in last week, I'm shocked. I mean, you have like serious U.S. companies moving 200-300 people to Belgrade, and you know, and these people are paying 18-19 euros per square meter, which is quite high, but they are paying it.
Right. Ariel, so we just heard how happy you are, and I don't know what.
Everything's a bed of roses in Belgrade.
Yeah, it's too easy.
He forgot to mention what's the interest now in Belgrade, right? 5%. Anyhow, I'm Ariel Ferstman, CFO of GTC, management board member. GTC listed vehicle in Warsaw. We have some listing in Johannesburg as well. GTC over 25 years, CE market player. We were leaders in several markets. Some other competitors overtook us in the last few years. We are predominantly commercial real estate player, investor, developer, asset manager. I think we probably work with everyone here in this room in the past, the present, or probably hopefully in the future. We are spread in 6 different countries with our main focus in Hungary, I will say Budapest and Poland. 70% of our portfolio is in those 2 countries. We used to have a large portfolio in Belgrade, which we're very happy, and Indotech took from us, which I hope Indotech is very happy now as well. I don't know, Christian was somewhere here, I don't know where it was.
They told me yesterday they were very happy.
Of course they should be happy. It's been an interesting year for us because there were a lot of changes for us. We are changing our strategy. We are expanding our basically the nature of our portfolio. We are targeting 3 different new sectors. We start with an initial investment in Western Europe, in Ireland, recently done, 115 million euros. This is a technological hub investment. It's a sector that we see as a sustainable growth sector. The second thing is renewable energy. We are looking into investing in renewable energy as well. We're looking basically to be able to buy solar farms and be able to secure energy to be able to source to our tenants and through that perhaps be a little bit more competitive on the service charges in the next few years and be able to cap energy prices. We're also looking to invest in PRS in Poland. I mean, we see PRS as probably the next winner sector in Poland in the next 10 years. We are establishing a new investment vehicle, a development, I will not call it a fund, a development investment vehicle. We're trying to raise third-party funding as well. It's looking very promising in spite of the market volatilities because people understand the sector, they like the sector, they understand the resilience, they understand the need of flats in Poland, and the lack of housing in Poland especially, probably great. Also trying to look for a flat in Poland, in Warsaw today is also, hard. Not only offices in Belgrade, but probably if you try to look for a flat in Warsaw, good luck with that as well.
Very difficult and not cheap. Yes.
Exactly.
Luckily, I'm not looking yet, unless you heard from my
landlord. Or maybe you
landlord.
bought some, so maybe you do a good investment, by the way. And the market is shifting very much, and I think Poland is in a great position to be the big winner from all this geopolitical crisis that is going to be with us, I don't know for how long. Now, in terms of the market, I heard Boško, he's so happy in Belgrade. Belgrade is a great market. It's been always a great market for the last 10 years. It's been an undervalued market, which looking always for foreign investments to come. The biggest issue with Belgrade is the liquidity. So I think our transaction early this year start creating liquidity in the market, and it's the great benchmark for new investors to come and invest in Belgrade. The office market is a very strong market, always been, and perhaps will be because there is a huge demand. I will be looking forward to hear all those American investments coming over because we have another 75,000 square meters to develop in Belgrade, and we will continue doing that, rebuilding our portfolio. The biggest issue in Belgrade, I would say, is the financing cost, and in the end, also for the Budapest market as well, will be. There's not too many cash buyers, so if you're looking for investments and you're a cash buyer, perhaps this is your right time. You will get great deals, and maybe in the next 6 months you might get even better deals. But if you are a equity plus financing buyer, it's going to be a little bit harder for you because your returns will be a little bit lower because they're not really willing sellers. There's no pressure on the market to sell. Leverage are still low on good ranges in comparison to 10, 15 years ago. We ourselves, we are close to 40% LTV, so we're pretty comfortable. But if you're in a new entry market and you look for financing, it's going to be more expensive. Yields are not moving, so less returns. But if you're a cash buyer, there's no brainer for me in terms of the market. I think I overextending a little bit the intro on the market.
No, it's fine.
But I pass it to Hubert also as well.
Okay. Thank you. Yeah, talking about flex operation, 3 years ago, the main question on the panels was, is flex here to stay? Now, I would say we all agree, yes, it is. The question is, how much of proportion is a healthy proportion? According to Jones Lang, it should be 25% of the office stock. Today, it's between 2.5% and 4% in our markets. Of course, London is an exception, but Amsterdam maybe, but in our markets, 2.5% to 4%. That means we have a lot of potential to grow. What we observe as an operator in 5 countries in CEE is that the basket, which is a flex basket, is basically everything up to 20 workstation. This is our own definition. It's not a standard definition, just what we observe, which would be an equivalent of 200 square meter by 10 square meter GLA in one workstation, right? This basket is kind of stable, but what changed completely is the corporate basket that was not existing 2 years ago, right? And why is that? Because, yes, we have hybrid work everywhere, work from home, 1 day, 2 day, 3 day, depends on the policy of the companies. And this is also here to stay. It's not something which will disappear. And if some people think there is an old normal anymore in the future, it's not, but okay. And these corporates now facing expiring rent, which they locked before 2019, right? So each lease which comes to renegotiation and extension gets renegotiated and re-evaluated in the light of hybrid work. So what I really need to bring the people on the space. Do I need 100 workstations for 100 employees, or is it sufficient to have 50? There is a clear trend in sight that from 75% core, we're going down to under 50% core nowadays, right? So the flex part is much bigger nowadays. And for us as a portfolio, we see 70% of the leads still comes from the flex basket, but they only making 30% of the revenues, while 30% of the leads coming from the corporate basket, but they making 70% of the revenues. So our mantra for years, and I hope some days I can convince also Ariel, is you have no chance whatsoever as a landlord if you do not open to sustainable lease and achieve premium rents, if you do not open your portfolio to a core flex leasing strategy, which always includes 2 things. You need to have a plug and work standard flex operation in your building or in your business park. And you need to use digital tools to allow your tenant on their flex exposure, not on the core exposure, but you can combine it, to book the space and enter the space via digital access kit, right? It's not gonna work with 3 different access cards starting on the garage over the main reception to the floor and then to the office. That's not gonna work. So you need to invest a little bit, but you will see you can achieve premium through 2 services. As for us as a company, what we did the last 3 years, because it was a question of death or life during COVID for us, right? Without the helps of the landlords And without the help of our investors, we would not be sitting here anymore. I mean, I personally, yes, but maybe the company not. And now we transformed basically from a flex operator from what we call brick to business consultancy to help a little bit how you can transform a regular office space towards a flex space to a space as a service operator, okay? And that needs a little bit to think what could be space as a service and what is the sense of space as a service to sell services to achieve premium on market rents. Because what we clearly see, you will not achieve higher rents just because the interest rates going up or the construction costs going up or the yields going down. This is not happened. You need to bring something additional value to the tenants that they are able and willing to pay premium. And these can be two things. The first thing is services and the second is sustainability. If you can prove on these examples from Peter on the service charge, that your service charges are stable and you manage and do everything fully transparent, to keep this under control, tenants will be ready to extend their lease, right? If you can't prove that, you have really bad cards on the table to win this game. And the corporate tenants are extremely sensitive nowadays for these questions, because also a year ago the question was, yes, okay, we got it and we believe it, but as long I have a chain of tenants don't ask the questions, why should I adopt my core flex leasing strategy or my product proposition in the first place, right?
Yeah, why change anything if it's working?
Yes, exactly, right?
Don't kick the elephant or
yes,
something.
And you get this answer a year ago on the Expo, half year on the MIPIM, not so much anymore this year on the Expo. Mm-hmm. So every half year the perception and the awareness changed a little bit, right? I would say we are on the stage of engagement. We are not on the stage of commitment and action, but we are on the awareness and the engagement stage, so that gives us hope that something changed.
Right.
The next stage, and then I'm finished, is for us as a company, as a service provider company, space in the cloud, because we truly believe in the prediction of Jones Lang. Of course, we don't know, is it 25% the end of the year, 20 or 15, but it's so significant more as of today, what we see on the daily demand side and negotiations. And a landlord negotiates every 5 years a space, average. We negotiating our space monthly, weekly, yearly. So we have much more content and much more feedback on a daily basis what is changing. So we decided it's worth to set up this platform, WorkCloud24, which we expand our reach in markets from 20 million square meter to 300 million square meter of entire Europe to support landlords on the journey to transform towards the flex and to transform with the help of digital tools towards ESG compliance initiatives.
I just want to say, because he commented on us to try to convince me.
Yes. He's pushing you.
Yeah.
In front of everybody.
I think the flex office, there's not too much to convincing. I mean, we are already implementing our flex offices solutions within our portfolio, because we're not unaware of the situation, what happened with COVID. I think there was a little bit overshooting that 50 or 60% of your leasable area will be flex office, and you have to adapt yourself. People are not coming to the office, or they are coming. So we are adjusting ourselves. We are, destinating part of our GLA for flex space. We are creating our in-house somehow, capability to be able to do it. The thing with the flex office is that when you go to a flex office operator and you run the numbers and you want to at least try to achieve the same ERB or above, because you have actually a risk premium, the numbers don't add up at that time. So for ourselves, we need to make sure that the numbers, first of all, add up in order for us to make a decision whether we go in flex or long terms. We will always prefer to have long-term leases, because this is the nature and the core business of GTC. Long-term leases. Our financing partners like to see long-term and sustainable cash flow. Of course, I understand the need of the option in itself, and I agree with you 100%. However, there is also has to be a component where risk versus reward has to be properly addressed. Of course, there is one of the largest flex office operators in the world is Regus. So, even they are changing their model somehow in the light of this overshooting of flex office that in the end, we all know how we work end up, right? So those valuations are not coming back. So I think, there's gonna be a compromise, a pure balance between, long-term leases, flex office. Yes, there might be some flex office, but it was a kind of panic mode a year ago when we are having people not coming to the office.
I fully agree, and we see that on the valuation side. We don't have a banker now, but people can confirm that if he's still here. It was clear the time when we were imploded, right, when COVID came and so on, and this is not a bankable business at all, right? So either you have private equity or access to capital markets, but you can't go to the bank and ask for a loan on a service business. That's not going to work. It's just too fresh, kind of, even though it's existing for 30 years. But what happens now on the valuation side, what we got for proof, today the valuator goes for a property and there is no flex exposure in the building, you're getting discounted. That was exactly the opposite 3 years ago. 3 years ago, you had a new work or a rework or a mind space in your building, you got discounted because they didn't have the assurance on a sustainable income, right? But what changed as a change of paradigm now is how we perceive and manage income from offices. That means, for me, there is only one solution. We need to adapt the management approach from a center manager and shoppings. They do get their income on the yield and the return on invest only because they manage their tenants in the revenue and they make the premium on turnover, not on fixed rent. The anchor tenant will never repay your investment. You always need the small ones who pay the premium rents, and that only goes with services. That means the center management approach needs to go over to the office property management approach, and we need to question, makes it sense to have a facility manager who hires a security company who is carrying on the service for the tenant and having then above a portfolio or asset manager, who is reporting to the owner. I guess this is clear enough, and everybody knows that of us, right? You have something wrong going in your building, a leaking roof or something like that. It takes 2 weeks, 3 weeks, 4 weeks until you get a response. And then, if the heating is not, or the working, or the cooling is not working, this kind of management you do not do in a shopping center. If you do that as a center manager, you will have troubles with your owner and with your tenants. And I guess this is the change of awareness. And once we manage that, you also will not have a problem with the lending side and with the valuation side. So I think this is the next step we need to overcome, how we approach management for offices.
And Csaba, let's go to you. As you're managing and developing some properties, what are you seeing challenges for the office market for you guys?
User experience. Mm-hmm. So, for example, we're doing Academia here in downtown, core location, perfect location, and the biggest challenge is to provide enough user experience for the tenants as we think they will require in 6 months, 12 months time. I consider flex office part of that. Personally, I didn't see any valuations where the building's value were discounted because there weren't any flex offices. To me, flex office is more like user experience, as I said. Good news is that the construction costs we are seeing that are already stalled or falling back. So we did our budget 12 months ago, more than 12 months ago actually, for the complete refurbishment of the building, and we are significantly within budget after tendering.
Now, is this more materials or labor? What do you think?
Both. It's kind of special in Hungary because a lot of the state development stopped, so there are free work.
Oh, okay.
But that's good news. We are about to sign leases at the top of the market, which is good. And in the existing portfolio, as I said, 60,000 square meters, we are seeing extensions, we are seeing expansions. None of the COVID effects are there. And when in my introduction I said it's good to be an existing landlord, I mean that the only effect COVID had is that the pre-leases are pretty much gone. It's better for any tenant to decide on staying put. An existing landlord can do a shorter lease, shorter than 5 years, maybe 2 years. You know, and then you can increase your rent even on top of the indexation and have a good deal with the tenants.
Yeah, I mean, a lot of the big corporate end users we talked to, they just said, we're just extending the lease because we don't know what to do. They're not,
Exactly.
If it's people out of the office market, they always say, oh, the office market's dead. And then anyone in the office market or leasing, they're just like, it's not dead. We just don't know we don't know if we should go up or down or left or right. So we're just staying where we're staying at the moment.
I think in Budapest especially, it's far from being dead, the office market. The latest data on vacancy is 11%. I think it's a healthy market. What wasn't healthy was, 6 years ago when all the B buildings were full as well. That's not healthy.
Right. And Zinaida, as a boutique broker and dealing with family office money, let's say, what is the appetite now, if any, for your clients?
Well, it's more, as I said, it's more on the transaction side. It's more on some fundraising and development land, but because this is an office panel, so I'm trying to reach back to the topic and also from my experience in the past working with a very, very large pan-European developer where I worked with key clients and corporates and how the market, what I've seen in the past 20 years and the past 3 years, how the market is transforming and what's going on now. I have a lot of questions of my own of what's happening here, what is happening to all the sublease market. There are a lot of unopened cans yet that are yet to be tackled, and what's happening here. There are so many challenges, and we are speaking about the energy prices, the service charges, the the exposure, the geopolitical questions, what the user experience, hybrid work. There is so much transformation and so many changes happening right now at an accelerated speed that we know that our industry, and I worked for developers, investors, asset managers in my most of my career. This is a new territory for the past four years, but our market is very traditional, and we cannot usually keep up with the transformation and the events around us. So I think it's a huge challenge to the market and to the landlords and developers to adapt, and it's very, very hard to predict on what's happening. What's obvious is if you look around, if you look at buildings in the afternoon, now it's getting dark, there are dark buildings and unused space, rented, paid for space, which is it's unused. There are signed long-term leases, and in my leasing days, we were signing 5-10-year leases, and tenants, big corporates with decision-making in Western markets, they, as far as I know, demand more and more flexibility and shorter-term leases. Then you have an issue with financing and your covenant and your bank and your valuation, and we know that the bankers are even slower to adapt to the trends and to the changes and to accept the new pricing. And the hybrid work is definitely here to stay, and it is putting pressure on the existing leases and whether they will be only extended, and what's happening with the sublease market, of which I hear very little of. It's not my main area of activity, but as far as I know, and we had some small mandates on office searches in Budapest, and actually we ended up reshuffling 3 tenants for 700-800 square meters. It was a small, it was a nice little exercise, but dealing with subleases, tenants, landlords, it was a huge pain. And but apparently there is a lot of sublease space on the market which is there to be handled. And I, having worked on landlord side, when there is only so much time, if you have a 5-10 year signed lease, but you're only using 70% of your space, I think it would be too optimistic to say that these tenants will just bite the dust and keep paying for the remaining 5-7 years to come when it has the way people work has completely transformed, or that they signed up for a lease of 15,000 square meters, but turns out they only need 8,000 square meters of that actual space. And clearly it's a process of negotiation. And then now you have the issue with the service charges and a lot of B-stock building, which is there to be addressed. And I think this is another big, huge challenge. And ESG on top, that there's a lot of old, inefficient stock which has to be dealt with. And this is clearly one of the ways to approach the current situation, not just build amazing new buildings, but to refurbish old buildings, old assets, make them energy efficient, reposition them, and make them, a sellable product, because Western Nordic investors will only invest in, future-proof buildings.
Yeah.
And there's a lot of that to recycle. We don't always need to build new and new and new, but recycle the old and tackle the challenges there.
Right. And subleasing always sounds good until you actually start digging into it, and it's always a bit more difficult, I think. Angelina, looking at Belgrade and you're developing a lot there, you're working on things. What would you say, how do you see the market going? Is it time to go even put in more into office or cut back a little bit? How do you see your development plan for the next few years in Belgrade?
Well, if we see the vacancy level, so definitely Belgrade would be a good place to put your money and to build an office building. But I would say that maybe some other cities in Serbia, like Novi Sad and Niš, that are underestimated, and there is a significant amount of demand there. So I would say like once in 2 weeks we get an inquiry about the office in those so-called secondary markets. But next year, and maybe even 2024, I think it's going to be very challenging in a field of project finance. We are not an EU market. We have only foreign banks, only one domestic bank. So as they did in 2008 and in 2020 during Corona, they will just, redraw.
They go pretty quiet, pretty quick.
They're already very quiet. So I would say it's not up to the level of interest rates. It's about the amount of money. So it's going to be one small pile of money, and we will all compete for that small amount of money, and we will see who will get it, or the best deal will definitely take the money. So. We are planning to invest in office, but as a part of mixed-use projects. In next 5 years, we just put that in our 5-year strategy, and we are also, relying on steady demand. I'm not afraid about this. Downsizing or hybrid offices. We had some of our tenants that downsized on one hand, but on the other hand, they downsized the number of working stations, but they asked for additional space for something called like community space. So most of them are really struggling and trying to find a way how to attract their employees to come back to the office and to work together. So I really believe in people as social beings, and that's how I build my strategy in offices and in hospitality business also.
Right. And so when you're developing a project in Novi Sad or somewhere in the secondary cities, I mean, in some ways you're really going it alone, right? You can't depend on the banks. You can't depend on a lot of let's say, you can't be too leveraged, or it's really your own money at this stage, yeah?
Well, luckily we are a part of a bigger holding,
Sure.
So we rely on their support as we did in the past, and that's how it's going to be. I mean, I don't see any other way. And since the level of rent is actually a simple economy, it's a result of demand and supply. So we rely on that the lack of money will, have the lack of new projects and the lack of square meters, and then we'll jump in.
Right. Well, and we have a question over here. Do we have a microphone? Are we good? I mean, I just noticed in traveling around the region and country by country, whenever I'm visiting offices in Serbia, the offices are full. It's not, some countries I go to, the offices are all empty, and in Serbia it seems like everyone's in there and working.
Yes, we have some of the our office buildings that we somehow managed to strike the right niche. We have the occupancy of 100%.
Right. It seems like they're actually in there working 100%. So,
Yeah, hi, it's Brian Beaton, Atrium Property Services. Boško's not wrong. The office sector is booming. Most of the sectors are booming in Serbia and Belgrade, with Ariel and Angelina also talking about how strong the sector is there. An office building and the lack of supply is a no-brainer to come and develop office buildings. If somebody's coming, for example, you were saying about Novi Sad, maybe you build a bit smaller building, and then maybe you don't need so much project financing, perhaps. At the end of the day, I think we're just lacking the foreign investment because we're not in the EU, and people just see this extreme risk. I guess my question is to get the institutional funds into Belgrade. What does Serbia need to do, and at what stage will the institutional funds come in before we get into the EU?
I don't see anything coming before we are in EU, really. That's been the story for the past 30 years. I don't see that something drastically will change before we become the part of EU. That's always the answer when we talk with some huge investors. Their risk here is higher because we are not the part of EU.
Yeah, and I understand the legal.
I think, Brian,
risk.
you need to see whether there's institutional money in the whole region before Serbia. I mean, even between the EU, the pure institutional money, the major, is going to Czech Republic and Poland.
Yeah.
So let's, in the end, this is how the cycle works. Yeah. Budapest coming later with Bucharest, and Sofia gets maybe sometimes something. Now, you're asking about Serbia. Sofia is between the EU. Bucharest is within EU. There's not too much institutional money there. Almost none. It's major, of course, you have major regional players coming in the market. Austrians, now it's Czech money. It's all Czech money, but in the end, the institutional money will come to Belgrade, will come to the region, but it's not a function of the EU. It's a function of, I think, it's the whole perception. I mean, and today it's actually the question is, what's going to happen with Europe in the end? It's not about the institutional money. I mean, we have so many big investments in the American investments coming into Poland. We had Boško saying there's going to be a lot of American companies coming into Belgrade. So there is a reason why. And it's not about looking for good yields or investment. It's a strategic geopolitical decision. So I think it's much more on that discussion, which kind of money or which kind of investors will come. By the way, Microsoft, right, has a huge...
Yeah, I was about to mention
exactly.
that Microsoft selected Belgrade as their
NCR, massive.
Yes, NCR has the regional headquarters. Yes. Microsoft took the entire Tower 2, 15-year lease for the regional headquarters. BlackRock, the Skyline Office Tower, 6,000 square meters. Again, 10-year lease. So, these people would not do this if they didn't know something. So, right. and I really it was before the war. It was before the war, and the deal is, let's ask Afi. They got it.
Look, we were pitching for BlackRock as well, and those guys took it from us. Yeah. Maybe Boško took them there. I don't know. We'll see.
They pay.
But what I'm saying is, in the end, you have a lot of American investments coming in. You're gonna see now in Poland. There's a lot of, the defense spending is coming up. There's gonna be a lot of subcontractors coming in. Someone has to produce that defense spending. There's a lot of capacity in Poland. There's a lot of immigration. Probably Craig knows better than me. He's living there. I mean,
You have to learn Ukrainian if you want to come to Warsaw now.
I mean, I was impressed. I went to a PRS project recently, 100% Ukrainian language there, no Polish. I mean, and these people come to work, really, and the adaptability, it's the synergies is there. And we had this great revolution in Israel in the 90s with the massive Soviet Union immigrants coming to Israel, which transformed the country completely to a high-tech, industry today where it is today. So Belgrade is coming in, super strong, high-tech. It's all high-tech we're talking about. This BlackRock bought a company which they're using it. It's a startup company. It's all R&D. I mean, there's a lot of money coming in. You ask Brian, when are those real estate institutional money will come? I don't see the reason why, a German pension fund or a French pension fund or a UK fund could not buy an asset which is on lease, fully leased to Microsoft, 15 years lease. It makes no sense to me, but happily AFI is enjoying, we are enjoying, the rest of the players are enjoying good yields, but the yield compression will come. It's a matter of time, although maybe not in the next 2-3 years, but in the long term, Serbia, it's a right country for the EU, in my opinion, and Poland it's even greater country. We do in the EU. So we are big believers of those two countries in terms of investment from our side.
Just to jump in, all those companies that are in Serbia, BlackRock, then Microsoft, we have a huge team from EY also. They're all coming due to working force, very educated IT working force. And that's maybe the path that will Serbia go, trying to provide a working force that is in a huge lack in other parts of Europe.
And Gary, you have a question? Yeah, somewhere. Yeah, there it is.
Going back to, or going forward to, sustainability, with the developers, Csaba, your project, the Academia Centre, is a renovation of a classic turn-of-the-century building. I visited the new Trigranic building, which is a new building, Millennium Gardens, a couple of weeks ago when it opened, and the Belgrade projects. Now, in Belgrade, is sustainability accreditation the norm? Are your projects BREEAM, LEED, and well accredited? The second part of the question is, how do you adapt a renovation building to meet contemporary requirements? I believe that you said that you're bringing it up to BREEAM accreditation, if I remember.
We will have all the accreditations, but the most important thing that the new marketing slogan of Academia is, it sounds fun in Hungarian, sorry, Nincs gáz. Nincs gáz, which means no gas. And no, if you say in Hungarian there's no gas, it means that you're chilled. There's no problem. So in Academia we will not have gas. That's what we do. Yeah.
But on the size of the rooms like this, I mean, how do you make that?
We will have a heating and cooling working on electricity. That's it. Yeah.
All right. Okay.
And so are your buildings of the same standard and meeting the same requirements as you would get in Western Europe? For example, the Microsoft building or the Delta real estate buildings and so on.
I only can give you, as I'm not a developer, obviously a landlord, but I can give you a feedback from a panel earlier this year where Hubert Abt, the head of sustainability and planning and development, and they have exposure in London as well, right? And he said the learning curve they get from London is extremely steep. That means that in a market like London, fully developed, basically, you know, all liquid, everybody's there, you need to benchmark much more higher levels of quality requirements as you do it in Budapest or maybe in Belgrade. I don't know, right? I've never been in Belgrade, but I have been in Kiev, and what they developed there was not, that was what I call Turkish development post-communist. You know, what we see early stage in the Jerozominski in Warsaw, this blue tower stuff, and which after 25 years you only can do one thing, tear it away. So the answer to the question is, as soon international money comes into the market, as higher or as more of this money comes in, as more request comes in, and as higher the quality gets on the architecture, on the buildings, and on the sustainability accreditation, if I'm not misleaded, but maybe you can tell more insight.
Certification is actually a necessity in Serbia also, and we are pushed by that by tenants. They are pushing us to be more green or ESG. Although in Serbia it's highly regulated market. The cost of electricity is highly regulated. That's how our government is buying peace and votes. And it used to be a very popular narrative, but some of the biggest tenants, international tenants, are asking what kind of certificate we have, are we in line with EU taxonomy, and we as an investor, we started to put certificates on our assets even before COVID. So our latest newly opened office building has a golden LEED. Csaba Center, Convention Center will have BREEAM. We are also starting to obtain certificates for some of our older buildings, and that is going to be a problem to somehow find the best balance between investment and what we're going to get in return. I read somewhere that, for example, Italy has 60% of office buildings that are built before 1960, and this is a huge cost to make it more energy efficient. Luckily, in Serbia, there are just a few older buildings, office buildings. So I guess the cost won't be so high to make them greener. But we need to go like little steps. First with solar panels, then with heating pumps, geothermal energy, and so on and so on.
I just to complement from the developer side, we have 99% of our assets certified or under certification. So this is not anymore a question. It's a standard. If you want to catch those tenants like Afi did, you have to have. This is not the question anymore. It's a tick mark. You have a checklist. You have to be green certified. You have to be ESG oriented. We were one of the large, pioneers in the Warsaw Stock Exchange to publish our first ESG, even 1 year before the regulation was coming in. I mean, this is going to be the standard. Our funding structure is based on green funding, so there's no way we can walk around whether we ask or not to do it. It's a must. Now, it's a good question you ask, because for assets which are reconversion or refurbishment, it's a big exercise, exhaustive exercise. Now, that's one of the major problems that there is in Western Europe, by the way, where predominantly most of the constructions were done a long time ago, and you need to reconvert. It's a very high price. At the same time now, whether we make it energy efficient or not, now we are being forced to be efficient on energy. So there's no more question mark whether we are efficient or not. We're going to be forced, at least for the next few years. So in terms of green certification and ESG, I will stop calling like that, because this is part of it. It's part of our industry. Will remain, will stay, and we can still debate whether it makes sense or not. But that's the rules of the game.
Yeah, I mean, minimum energy efficiency standards coming into play from 2024. That means if you have an energy performance certificate E and worse, you are banned by trading the space. You can't lease it, you can't sell it, and you can't finance it. It's a stranded asset, right? So you need to improve it. But due to this energy crisis, we do not wait until this comes into the game from you, because our tenants and users will already tell us, I don't touch this space anymore. As Peter said, €9 service charge and €8 rent. That's nothing. It's not working anymore, right? Mm-hmm. And my prediction is it happens exactly the same with ESG compliance initiatives, Article 8 compliant, where you need to fully disclose, fully transparent what you do. It goes as far for our platform, WorkCloud24, as we put that on blockchain. And people say, why? Well, what are you talking? Blockchain? That's cryptocurrency. And I say, no, blockchain is a technology which certifies whatever standard later is required that you did your measures, and it's fully transparent, right? You can't change it anymore. It's not like an ERP system which you can go back and cook the books, kind of. And this is coming because every money comes. I mentioned before, 8.5 trillion from Blackstone only goes in sustainable investment. And that means you even need also Article 9 compliant, which is a lot above Article 8. And that's the future, but not as we're waiting for somebody legislation makes a change. It's just the capital market will do that for us. And as the valuator pick up the stranded risk from the carbon, then the bankers will pick it up. The banker will tell you, listen, I love your property so much, it's all graded, you have all the certifications, but if you can't prove Article 8 documentation and Article 9 compliant, I can't finance it only by 50%, and your premium on risk is 2 basis points or whatever. So you will think. Property market, we had this ESG panel 1 week ago in Science Park. The guy from Market here, which is one of the market leaders in Budapest, they said they put the entire project of their next development in the box and redesigned completely to geothermic energy supply, because they said it's no way to go the old way, even a top quality building, because you need to rethink it. That is what happens.
Mm-hmm. And so we're getting close to the end of the panel, but before we round it up, we'd definitely like to hear a little bit from Adir, who's sitting in the back. As you heard a few of the panelists mentioning him. If our hostess could bring the microphone to him. Adir is country director for AFI Europe in Serbia. So if you could take the microphone from Gary and bring it to Adir, who's in the back there. And Adir, thanks for coming in and joining us here on this panel. And I know you have a pretty big, let's say, pipeline or idea over the next 10 years what you want to do in Serbia. And if you could kind of give us your opinion on how you see the office market, and as you've developed a few buildings around town and have a few more in the pipeline, how do you see the market and your moving forward?
So yeah, first of all, thank you for this very diverse panel here that I see. I mean, the people, some of you I know personally, and I tend to agree with most of the things that were said in that discussion. AFI Serbia basically was established in the early 2000s in Serbia. We're very active in the market. We are currently, I can say proudly that we are a market leader in terms of office market in Serbia. We are active only in Belgrade. This was our decision strategically, made many years ago, and for now, still is. Looking a bit to other cities like you said, like Novi Sad, maybe niche, I don't know, but still focusing and allocating all our resources and energy to development in Belgrade. I fully agree with all of you that the perspective in Belgrade is there, and we see the market, the demand is only increasing day by day. Our flagship project called Airport City Belgrade, which has currently more than 170,000 square meters of office space, is 96% occupied with the AAA tenants. Most of you know it, and truth of the fact is that we continued with another business park in Serbia called AFI City Zmaj in Belgrade, which is proving to be also a lot of leads we have there, and I believe that this will be a very successful development. Assessment of the ESG requirements, taxonomy, and all the green, I fully agree with Ariel that we are already there. I mean, it's behind us. And we look forward, this is obvious for us, that, and we can argue whether it's required or not required, or to that level or to the other level, but definitely we have to meet all those requirements. But one day we will be even be required to maybe to fulfill other much more, I would say, challenging demands. So definitely we need to, or we are already looking forward or looking how to convert all our existing assets into that. We are at the end of that conversion of most of our assets to the ESG requirements, the ones that are old, the new ones obviously already there. So this is that. In terms of foreign investment like American companies, which Boško mentioned, definitely we see that. They are part of us. Lately, Rivian, American company, came and invest. Of course, Ariel mentioned BlackRock that came to invest in our building, in Skyline. Microsoft that went to Onczay. So you see that all those American big companies, funds, whatever you call them, are coming to allocate their money into the market of Belgrade. Looking on the overall perspective of the next year, okay, or the year after, definitely we need to plan our moves ahead. It's not going to be an easy one like last year or the current one, but we are not that concerned from the years ahead. Okay, you have in real estate market. I think that all of you are very experienced and had many years of experience behind you in the real estate. You have those waves of ups and downs, and we are definitely approaching a kind of a recession, and but definitely not the one that will shake. Especially a company that came prepared to that mini recession, if I may be cautious by saying so. Yeah.
Okay, great. Thanks a lot. Well, we'll wrap up the panel, and we'd like to just get a few final comment or final pearl of wisdom from each of our panelists. Zinaida, we'll start with you. Any final comments or things you want to leave us with?
I was actually thinking about what the closing thought may be, and on my end, it's prepare for a next year of well, as I said, a rough ride, or it depends on which sector you're in, but it's going to be challenges. I think it's going to be a lot of negotiations, renegotiations for a lot of the players in the industry. A lot of rethinking of how you approach your business and your product, and it's going to stretch on. And I'm not trying to be I'm not pessimistic. I think I'm realistic. It's my view. I think from a Hungarian perspective, we are especially vulnerable and are exposed on multiple ends to a sensitive time ahead. And if you look at it from a tenant perspective, whether it's the energy challenges, the service charges, their euro HUF currency issue, the indexation, the inflation, all the local, mix that they are facing, there's going to be a lot of talk with the landlords and the market next year. And again, we've seen times like this before, not too long ago, and I've actively lived it through, and I actually did leasing at the time of 2008, 9, 10, 11, 12. Extremely painful years. Hopefully they will not be, the years will not be as painful and long this time, but definitely even maybe more dense and accelerated and encompassing even more challenges, but on a shorter term.
Okay, thank you. Angelina, any final comments?
Some of us did a very good job of promoting Belgrade and Serbia as an investment spot, so I would say come to Belgrade, invest. We as a developer, we are not afraid of competition. We actually embrace it, and we think that's very healthy for the market.
Okay, great. Ariel?
I think whoever did a good job in the last few years on structured debt and keep, good, healthy debt maturity profile and low leverage, and have a lot of cash and high capital to deploy, be ready to deploy capital because there's going to be a lot of opportunities. I think in terms of inflation, interest rates and things like that, yes, it is what it is. It's the circumstances, it's the macro, but real estate still is and will be a safe haven for money in the end, and resilient. It's a cycle, up and downs. But when you see the long-term play, we believe that real estate is always a big winner, regardless which sector you go. Every sector has its challenges. Now, for me, that's the most important thing. In the short term, I think there's going to be a lot of opportunistic capital, so be ready to deploy your capital. There's going to be good opportunities. Perhaps Belgrade will present good opportunities as well. And this is what we are ready also, GTC also, as well.
Okay, Hubert, last comment?
No, I guess he has.
No, I mean,
also, yeah. Okay.
your last comment.
Yeah, I'm super optimistic, of course, for our business, because that's clearly in line with hybrid work, ESG compliance. I would just raise one thing, and usually this is a topic for another panel, but to give you some thoughts, we're talking about occupancy still. Occupancy is not in the book of ESG. You will not find one glossary or chapter of occupancy in ESG. You only will find one which is called utilization. That means you need to take care what happens in your space. And if we talk about, yes, we are fully leased, this doesn't mean, as you pointed out, we are fully utilized. And as we know, I don't know how much percentage we need to top on the 11% which you mentioned, but we know this telecom, 52,000 square meter, 30,000 not used, right? We know the Nokia, we know the EPAMs, we know in each city, M-Banks in Warsaw, Bucharest, Orange, 60,000 square meters, fully leased, but not used. And if you go to Article 8, there's no way for you guys to get any certification, and you can put your LEED and your BREEAM in your bathroom. It will not help you. It will not help you. No certificate in the world will help you if you do not solve this issue, right? So again, it's more complex than it appears, and it's not done with any existing certificate in the world. You need to change fundamental from top down how you approach managing your building, and that then will lead in a completely different user experience at the end, and how we perceive income from offices to pay back the costs, which are obviously related to, and yeah, that's it.
Okay, great. So not only lease it to them, but make sure they use it, the space.
Well, I think the utilization in this region is a lot higher than in Western Europe, one. And the second is that it will certainly develop as the unemployment rises.
Yeah, and the economic supply which goes against it. So in 5 years, maybe it's sold. But ESG, according to ESG, you are responsible for that, and not the tenant. You as a landlord.
Hubert, it's not enough inflation, interest rates, war.
Utilization.
Sorry.
Now make sure your tenants are utilizing every square meter.
Yes.
And Boško, I wanted you to go last, as you're based in Serbia but covering the region. So give us some.
Yes,
great
I was about to say that maybe we as brokers should be the last because we're the most positive. So,
It's always good to buy, always good to sell, always good to invest.
It's always a good time. It's always a good time. Anyways, yeah, on behalf of Southeast Europe, which I proudly represent, I think that, in different countries, different assets, for example, Croatia is hugely popular now for industrial. Just in last few months, there have been a couple of huge deals in Zagreb area and in the area of Rijeka. Slovenia, again, very good for industrial, very good for office. Bulgaria, EU country with, let's say, lower cost of labor, again, very good for office. A lot of big companies are there. Serbia, as we said, there's a huge potential. But in general, I think that investing in Southeast Europe will definitely benefit to everybody who comes in smart. And I think all the big players like GTC, AFI, Delta, all the guys who are MPC at the end, whoever came, they made money, and I think this trend will continue in the future.
Yeah, okay, great. So that'll wrap up our panel on office. So thank you all our panelists. If we can have a big round of applause for our panelists. Thank you for your time and effort.